discussion now of statements of net income and comprehensive income by shifting more toward the statement of stockholders' equity. So while the balance sheet reports the final balances in each of these accounts that we see here, the statement of stockholders' equity actually provides an analysis of the changes in these accounts for the year. So, for example, contributed capital accounts, which are made up of your common stock, your preferred stock, and if you issue those stocks above par, you would have additional paid-in capital in excess of par common and or additional paid-in capital in excess of par preferred. Also, retained earnings, we know that your net income increases retained earnings, it's close to retained earnings, and net loss would decrease retained earnings. And any distribution to owners, for example, dividends, would also decrease your retained earnings. Then we have accumulated other comprehensive income, which we'll talk a little bit here in a minute. Treasury stock, which is the stock that's bought back by the company, so it's no longer outstanding. And then any non-controlling interest that the company has in other entities. So GAAP doesn't actually require that companies provide or produce a statement of stockholders' equity. However, public companies are required to disclose this information, and it's required by the SEC. So most changes to the contributed capital accounts are due to additional investments by the investors and purchases and disposals of treasury stock. Net income and dividends result in changes to retained earnings, and items that are included in other comprehensive income are actually going to be closed into an account called accumulated other comprehensive income. So now we're going to take a look at an actual example of creating a statement of stockholders' equity. So here we have Starling Corporation. They started the year on January the 1st with the following balances in stockholders' equity on its balance sheet. So we have our retained earnings, our common stock, which has a $1 par value, and we issued 100,000 shares. We have additional paid-in capital in excess of par, so we obviously issued our stock above par. And we have accumulated other comprehensive income. So it also reported the following income items and transactions with owners during the current year. So we actually ended up with a net loss. We declared dividends. We issued an additional 20,000 shares of common stock. We had an unrecognized pension cost. We had unrealized gains on available for sale investments, and we had a foreign currency translation adjustment, which ended up being a loss. So now we want to use this information and create a statement of stockholders' equity. A statement of stockholders' equity looks similar to something like this. So it has 4 columns and a total column. So we have common stock, we have our additional paid-in capital accounts, we have our retained earnings, and we have accumulated other comprehensive income, and then of course our total. So we want to use the information that we're given to fill in the blanks here, basically. So let's see how we would do that. So we want to take each item and figure out, well, which column does it basically go in? Well, we know that net losses and net income actually affect retained earnings, so that will appear in the retained earnings column. Dividends declared also affects retained earnings. When we pay out ownership in the business, that decreases our retained earnings. When we issue additional shares, that's going to increase the common stock column and the amount in additional paid in additional capital in excess of par if we issued them above par. And unrecognized pension cost, that's actually an other comprehensive income, which is closed to accumulated other comprehensive income. And the same follows with unrealized gains on available for sale investments, as well as foreign currency translation adjustments, which was a loss in this case. So when we take that information, we analyze every single individual piece, and we put it into our statement of stockholders' equity. We find that our common stock has actually increased now from 100,000 to 120,000. Additional paid-in capital went up to 722,000. Retained earnings, just like we're thinking about a retained earnings T account, if you will, we have our beginning balance, We had a net loss in this case, which reduces retained earnings, and dividends decreases retained earnings, leaving us with $842,000 in retained earnings. We had a beginning balance and accumulated other comprehensive income. We had one item that affects accumulated other comprehensive income, and that was other comprehensive income of $22,000. And we get a total ending balance in our equity of $1,723,000.